All right, let's dive right into Airbnb's latest earnings report because things got interesting. On the surface, the numbers looked a little confusing. They actually missed on their main profit metric, but then you look at the stock and it pops after hours. So what on earth is going on? What did the market see that wasn't in the headline? Let's break it down.
So yeah, this is the big question, right? The main number, earnings per share, or EPS, came in light. It missed what Wall Street was expecting. Now, normally, that's a recipe for a stock to take a nosedive, but not this time. Instead, Airbnb rallied, climbing over 5% after the bell. That's a huge tell. It means investors were looking right past the profit miss and focusing on something else entirely.
And here's that exact split decision. You can see it clear as day. The EPS, 56 cents, when the expectation was 66 cents. That's a clean miss. But then you look at the top line, the revenue. Whoa, $2.78 billion when the street was looking for 2.71. That's a solid beat. This right here is our first major clue. The market just shrugged its shoulders at the profit miss and went all in on the revenue beat. So this brings us to what we're calling the earnings paradox. You have to remember, investors are always trying to skate to where the puck is going, not where it's been. And in this case, they look straight through that EPS number to hunt for signs of future momentum. And boy, did they find it. They found a growth story that was so compelling, it just completely washed out the bad news on profit. Okay, first piece of evidence, gross booking value, or GBV. It absolutely surged, up 16% from last year to a massive $20.4 billion. Now, this isn't just some tiny beat. This was their highest growth quarter in more than 2 years. This number, which is basically the total value of everything booked on the platform, is screaming that demand is not only strong, it's actually getting stronger. It's accelerating.
And here's the kicker. This growth wasn't just because of higher prices. Look at this. Nights and experiences booked were up 10%, hitting almost 122 million. That was the strongest quarter for actual booking volume all year. This tells you that the core engine of the business, getting more people to book more stays and activities, is firing on all cylinders.
So you gotta ask, how'd they pull this off? Was it just a lucky quarter? Nope. The big takeaway here is that this acceleration didn't just happen by accident. Management has been running a very specific playbook, a deliberate strategy, and this is the quarter where we're really starting to see the payoff. And here is that playbook. These are their 4 big focus areas. Now, they're spending money to do this, which helps explain some of that pressure on earnings, but it's smart, targeted spending. They're dialing in the core user experience, they're pushing hard into new international markets, they're adding things like hotels to the mix, and they're weaving AI into pretty much everything. And you don't have to take my word for it. Here's the quote directly from the CEO, Brian Chesky. He's basically saying, hey, this is all part of the plan. He even used this great analogy about rebuilding the foundation of a house before you start adding new floors. It sounds like that foundational work is done, and now they're starting to build skyward. So what specifically clicked this quarter? Well, a few things. New features like Reserve Now, Pay Later really helped unlock demand, especially for more expensive places. They updated their cancellation policies, which made people more comfortable hitting that book button. And their international push is really bearing fruit. Brazil is now a top 5 market for them. And they're smartly adding hotels, which helps them grow even in cities with tight regulations on rentals.
Okay, so the strong growth in Q4 was like the kindling for the fire, but the forward guidance, that was the gasoline. Honestly, that huge after-hours stock pop was almost entirely about what management said is coming next.
And here it is. This was the real bombshell. For the next quarter, Q1, Airbnb said they expect revenue to be somewhere between $2.59 and $2.63 billion. The street? They were way down at around $2.53 billion. When a company guides that far above what everyone is expecting, that is a massive vote of confidence from management. It tells you they think this momentum is absolutely sustainable. And this really ties it all together. Management was super clear on the conference call. They said they do not expect profit margins to get bigger in 2026. And you might think, wait, isn't that bad? Well, no. What they're saying is they're taking all that cash they're generating and plowing it right back into the business to grow even faster. The market heard that loud and clear and loved it. It's a classic trade-off. Sacrifice a little bit of profit margin today for a much, much bigger company tomorrow.
So let's put all the pieces of the puzzle together. You've got accelerating growth on the top line, you've got a management team that is executing really well, and you've got super bullish guidance. With all that in mind, we're ready to make our call on the stock.
So our rating on Airbnb is moving to outperform. It's pretty simple, really.
The company has successfully flipped the switch and turned its growth engine back on, and the market is showing that it's willing to reward that strategy of going for growth over squeezing out a few extra points of margin right now. We think this story has room to run.
So how do you play this? What's the trade? Well, our core thesis is that as long as Airbnb keeps putting up these kinds of growth numbers, its valuation, its stock multiple is going to expand. So the outrageous but plausible trade here is to look at long call options that expire after the next earnings report. It gives you a leveraged way to bet on this rally continuing. The catalyst you'd be looking for is any sign that their new stuff, like hotels and other services, is growing even faster than people think. And the big risk? It's the macro picture. If the economy takes a turn and people pull back on travel spending, that would hit them for sure.
And finally, of course, just a reminder that this analysis is for informational purposes only. It is not financial advice.